Let's look at it this way. If you're not returning back home permanently, right? You think about what you could do with that sort of money. Think smart, think wisely. Do not build a house in Nigeria because of ego. Your £160,000 property you've bought and renovated 2 years ago, if property price has gone up by 5% each year, in 2 years, that property would have worth £176,400. Hello and welcome to this video. In this video, I'm going to share with you why you should not buy a property in Nigeria, Sierra Leone, Liberia, Ghana, or countries like that, right? Just to make it really clear. I'm not here to diss any country. I'm not here to kind of criticize any country. I'm just here to kind of share my experience and the benefit of investing in the UK versus Nigeria, Liberia, Sierra Leone and Guinea as well, because sometimes it's very important for us to understand how hard our money is working for us and what sort of returns we can get by investing in these countries, okay, before you get going. So please just have an open mind, learn from it, don't take it personal. I'm not trying to literally criticize Nigeria. Nigeria is an amazing country. I've loved the country so much. Most of my investors are from Nigeria. Most of my students are from Nigeria as well. And to be honest, I work with the Nigerians throughout my property investment journey. So I'm using Nigeria because obviously that's where my market is. Most of my clients are Nigerians. I just want them to understand what are the pros and cons of investing in the UK and Nigeria. So don't take it personal. It's purely just to talk to you. To understand what the benefits are. And actually this also applies to countries like Ivory Coast, for example, Senegal. If you're from those countries, it really applies, and it would really help shine a light to take your investment journey to the next level. If you like this video or any of my video, don't forget to smash the like button below, subscribe to my YouTube channel for more amazing tutorials. Let's get going. So investing, when it comes to buying houses or kind of investing in properties, is very important for you to understand what are the benefits or what are the return on your investment. Let's look at Nigeria, for example. Let's say West Africa, okay? So if you're buying a house in Nigeria or Sierra Leone or Guinea, basically you'd have to, in most cases, you'd have to buy the land and then build the house on top of the land. Okay, so if you're buying the house, if you're looking to build, obviously you'll buy the land and then obviously build it. So that is the overview process. But what you do first, you're gonna go out there, look for land, look for a suitable land, right? And then you buy that land and then you look for builders in order for you to be able to build your property as well. And again, if you're looking for builders, in most cases you would like your family members involved because you want them to kind of help you through the renovation or through the building process. So in the financial side of things, basically, if you're buying a house or building a house in Nigeria, in most cases you'd have to have the money in order to be able to build those houses. Okay, or in order for you to build your house, it could be a residential home, it could be a buy-to-let property that you want to build and rent. It could be anything. Whatever you do in Nigeria or say Sierra Leone or Guinea, you'd have to put that amount in order to be able to buy it. Suppose then you're looking for a land and you saw a land in Nigeria, somewhere very nice in Lagos, and you want to buy that land. That land may cost you about £15,000. Right? If that land costs you £15,000, you'd have to put that £15,000 to actually buy that land. So nobody will lend you the money to buy that specific land. Okay? And then obviously once you've bought that land, then you'd have to go through planning and get the planning approved, and then obviously you start building your own house. Let's say we have £100,000 ready to buy land and build a house in Nigeria, right? Even if you don't have it, but maybe we are working towards it in order for us to be able to build a nice, comfortable house in Nigeria around that price. So what you then do, basically, as I said before, you'd have to find the land, and then with that land, so let's say that land costs you £15,000, okay? So if the land costs you £15,000, well, we'd have to add that as part of our purchase cost. So if we look at the computer now, so if you can say £15,000, that's what you would have put down to buy that land. Obviously, all the legal documents, everything is included in that price. So obviously, because you're not lending or you're not borrowing the money, there's no deposits to pay. And then let's say now we want to build a nice, comfortable house in Nigeria so that when we go back home or when we rent it, we can rent it for a bit of money. Let's say we spend about £85,000 because we want to compare like for like. So £85,000, that then gives us a total investment of £100,000 to buy a property in Nigeria. So total cost would be £100,000 to buy the land and build the property in Nigeria. Okay, so once you build the property, obviously you own the property. There's no loan against it. You're literally the owner of the property. So that's an advantage. That's a massive advantage for you if you like to own and control stuff yourself. And however, you and I know we're Africans. If a house worth £100,000, right? In Africa, sometimes it's difficult for us to have people who would tell us the exact prices they're buying the materials or how much they're paying the builders. So it may cost you maybe the property itself worth £90,000, but with the commissions and all the rest of the stuff that your family members that are involved with or the builders, let's say it cost about £100,000. Hence the reason why I factor on £100,000. That £100,000 investment, it gets us maybe 3 or 4 bedroom house in Nigeria, very comfortable house, and then obviously you can then either use it when you go on holiday or you could rent it out. Now, I'm not saying it's bad to buy properties there, but here's the problem most of my investors face. They will spend lots of money. Some of them spend £100,000, some people spend over £150,000. They will build these houses. It costs them ridiculously lots of money because the people are messing them around, and it costs them fortune. And when they bought that property, unfortunately, family members tend to occupy the properties. Okay, when the family member occupy the property, there's no way they could kick that family member out. And then obviously they build that house for themselves. Actually, and some of them not even to rent it; it's just for them to kind of live in. And then family member moves in, and they're not moving out. They're not paying you rent. And when things goes wrong with the property, they actually ask you to fix the property as well. So I've seen so many and people struggle with that, especially families are involved. They can kick family members out, and also the family members are not looking after the properties. And then if anything happens to the property, they'll have to come back to the person who built that house for them to fix the property for them. Again, that's another massive disadvantage. In the situation where the person is renting the property, the family members collect rent, they never pay the owner back, or they will tell them the money's in the account. When they check the account, there's nothing there. And guess what? When things goes wrong with the property, also the family member contact the owner here in the UK to kind of fix the property. So that property becomes a rope in their neck, and it becomes a family problem, etc., because obviously families are involved in doing the works. There are some instances also where people actually give it to a distant relatives, or say to a solicitor or an estate agency. Things like that happen as well. The agencies don't pay them their money often, so it just becomes a trouble, right? But what I've realized is most of the people are buying the houses not to rent it, actually, is to live in, right? It's for them to live in when they go on holiday. That then begs the question, really, do you really then need to build that house if you're not going to live in it? Are you going to buy a house or build a house only to go and stay in it for like maybe a month or so, and then you're back in the UK? So it gets me thinking whether it's a good investment, right? That then gets me thinking about how about if we can look at it in a different perspective, right? If we're not ready to settle in Nigeria, do we really need to buy a house in Nigeria? If we're not ready to move back home permanently, do we really need to build a house in Nigeria? If we're not ready to settle back home, do we really need to build that house in Nigeria? So instead of doing that, I have a better option, because which I think would help us drastically. Let's now say we've got this £100,000 and we want to invest. And again, the benefit you get from buying a house in the UK that worth £100,000 is you do not have to put the exact £100,000. That's a massive benefit, basically. One benefit is the leverage. you can leverage a lot more with that 100,000. You and I know in Nigeria, Sierra Leone, Liberia, Ghana, or the Ivory Coast, you'd have to put that money down. You'd have to have that 100,000 pounds in order to be able to build a house. So in the UK then, let's say you're looking at a 100,000 pounds investment property because you are a bit clever, you want to invest here because here you can walk past the property, you can drive past, you've got a state agency, you've got laws, rules and regulation that would allow you to get your investment back and obviously get your monthly cash flow as well. Let's now assume we saw a property somewhere in the north that worth about 100,000 pounds. So 100,000 pounds, obviously we would need to put down a deposit of 25,000 pounds, which is the 25%. What that means is basically you're only putting down 25,000 pounds to buy a house in the UK versus putting down 100,000 pounds to build a house in Nigeria. Okay, so obviously let's now assume our renovation cost. Maybe we bought that property, we need to fix it slightly here in the UK. Let's assume our renovation cost is 30,000 pounds. So 30,000 pounds, that's what we have put down to actually renovate the property. Let's say we bought a 2-bedroom house and we are converting it into 3 or 4 bedroom. We're forcing the value of the property up. So now we've put down 25,000 pounds and we renovated that property for 30,000 pounds. So in total, we've invested 55,000 pounds in getting the property in the UK ready to be rented or to be sold. We have invested 55,000 pounds to buy the property and renovate it in the UK versus the money we would have put down in Nigeria, which is 100,000 pounds. So again, we've saved ourselves there 45,000 pounds. That's a massive leverage. That's a massive leverage, okay? And I'll tell you also what we can do with that 45,000 pounds as well by the end of this video. Let's now look at it the other way. Let's say we've got this 100,000 pounds we like to invest in the UK. So the benefit of investing in the UK, basically, let's say we're looking at the north. If you want to buy 100,000 pounds property, you don't need the 100,000 pounds in order to buy the 100,000 pounds worth of property. So at that advantage, you'd only need 25% of the 100,000 pounds, which is about 25,000 pounds. Again, that's a massive leverage if you were to buy a house in the UK. So let's do the figures because if numbers don't lie. So let's say that we saw that 100,000 pounds house, we put 100,000 pounds in our analysis. So let's say stamp duty and the legal cost. Let's say, but instead of 25%, let's say you put in about 30%, including stamp duty, legal cost. Let's say we put down 30,000 pounds, and with that property, because it's a 2-bedroom dilapidated house, we may invest a bit of money there because we want to kind of convert it into 3 or 4 bedroom house. So once you've converted into 3 or 4 bedroom house, you would have added value to the property. Let's say that cost us about maybe 30,000 pounds. So we put down 30,000 pounds. So that then gives us a total investment in the UK of 60,000 pounds. Compare to the total investment in Nigeria of 100,000 pounds. So again, you can see then we've got about 40,000 pounds benefit of investing in the UK, which is a leverage basically, because we haven't used the whole 100,000 pounds to buy the property here in the UK. So that's a massive advantage. I'll talk you through what we could do with that 40,000 pounds then, okay? So let's say then fast forward, we've bought the property, we have renovated it, it looks really nice and it's ready to be rented. So before you rent the property out, you would need to remortgage it in order to have that property in a normal mortgage. If you would have added 2 more bedrooms in the property, that may have forced the value of the property up. So let's now assume that because we've done all that work, we've done that hard work within the 3 to 6 month period, we've renovated the property into a 4-bedroom house, and that house has now been valued by the bank at 160,000 pounds. So that property will be valued at 160,000 pounds. What we will then do basically is to kind of get the bank to lend us 75% of the new value, which would be 120,000 pounds. This amount here, right? That would be the amount the bank will lend us. So in essence, once we've received that money, the next thing we need to do is to pay the 75% of the 100,000 pounds property we bought earlier on, which is this 100,000 pounds here. We bought the property at 100,000 pounds, but the bank lent us 75% of that, which was 75,000 pounds. And again, we need to pay the bank back once we finish the works, okay? So that then would have been £75,000. So that £75,000 is what we would use part of the £100,000, £120,000 to pay the bank. Okay, so the next thing then basically what we need to do is we need to pay ourselves. So we know we invested £60,000, £30,000 for deposit and legal, and then obviously £30,000 to do the renovation cost. That brings us to £60,000. Hence, you've got this £60,000 as an initial cost, because that's the cost we've actually accumulated in order to get the property at £160,000. So you can see that cost and this is the same because I brought that cost down. So looking at it then, so if we look at it that way, then we can see then we're able to force the value of that property from £100,000 to £160,000, and that the new bank would have lent us £120,000, which is 75% of the 160, and then we would have paid the 75% of the £100,000 which you initially bought the property at, and then obviously would have paid ourselves back the £60,000. So in this example, then we can see then on row 16, money left in and left out, we now know out of the £60,000 we've invested, right, we would have left in £15,000. Meaning we were able to pull all the other investment out, part of the £60,000, and we would have only left in that £15,000. Meaning we were able to get £45,000 back out of the £60,000 investment. Again, it's a massive benefit there. We were able to remortgage the property and then pull some of our investment out. So in total, then we've got that £45,000, i.e. sitting in our bank account. Okay, we would have got that money back out once you've done the remortgage. So that's a massive benefit also. You can see within 6 months, you've got some of your £60,000 back. It's a massive benefit because when you buy a property in Nigeria, there's nothing like that, right? Once you put your £100,000 in, you just have to collect rent until you got your money back. Okay, that is one of the massive disadvantages of investing in Nigeria or buying or building a house in Nigeria, right? Let's now assume the property is ready now. Okay, so what we're going to do now, basically we're going to rent it out. Let's say now the rent for that property is £950 per calendar month. Okay, with £950 per calendar month, we've estimated our mortgage interest payment is £400. So how do we get the £400? The £400 is the 75% of the 160,000, which is the 120,000, times the interest rate that we're paying, which is 4% interest rate. So that gives us a monthly interest we pay for the property at £400. Okay, obviously you've got your management fees to pay, which is 10% of your rental income, and you've got your repairs. We estimate that to be 5% of our rental income because we've just renovated the property. The property is kind of brand new. Okay, and again, let's say insurance about £20, so that then gives us £20 as insurance, and then we factor in voids. Maybe our tenant may not be able to pay us rent every single month, so we factor in about 5% also as a void. So in total then, if we minus all the cost from the rental income, we're making a whopping £340 net profit every single month. Okay, the benefit you get from this, basically, if you are in the UK and estate agency is managing your property, they are legally liable to pay you your rent every single month once the tenant pays them. So basically, you don't have to chase them for it. You don't have to report them for it. They will pay that money into your account every single month as and when they receive the rent. Massive advantage. Massive advantage. You can literally walk past the property, you can visit the property, you can inspect the property, and you can even hog the property if you wanted to, because you can drive up. They don't have to buy a ticket worth £700 or £800 to go and check your property. You can literally drive up north, maybe a couple of hours or so, you're there, and then obviously you can then see how your investment looks like. So the massive benefit out of this also is that the property is here in the UK, right? It's literally here. It's safe, secure investment, right? No family member would turn around and tell you I haven't received rent. No family member would come and live in the property, right? They know that it's a rented property and nobody's allowed to live there, because even the loan they're going to give you, basically, they are not allowed, you or your family members are not allowed to live in the property, because it's a commercial lending that you would have taken. And also, the good news also, the 75% you've borrowed, you're not paying for the loan. The tenant pays you and then you pay the lenders. right? So massive benefit as well. So if you're thinking about it that way, because you've got the 75% of the 160 and you're paying every month £400, but guess what? The tenant is paying you £950, which then allows you to be able to pay the £400 rent. Massive benefit. So you're making £340 per calendar month. Times that by 12, you are on £4,080 every year. You've got that money, you've got it in, you're basically making that money passively without getting involved, without doing anything with it. So let's now look at the biggest advantage of investing in the UK, because this is what I've been banging on, and I'm really hoping that this would make a kind of a massive sense to you. Okay, so let's fast forward 2 years after we've done all the work. So in the UK, we've got something that we call capital appreciation, i.e. property prices tend to go up 7.5% in the past 80 years. Okay, so in this example, we're not going to say 7.5%, we're not going to say 10%, we're not going to say the crazy capital appreciation we had during COVID. We're just going to estimate that the property prices would go up by about, let's say, 5%. So your £160,000 property you've bought and renovated 2 years ago, if property price has gone up by 5% each year, in 2 years, that property would have worth £176,400. Hello, that is crazy amount. Okay, so what you then do, because now you're a property investor, you know what you're doing, you can go and remortgage that property. Because what happens when you take a loan, sometimes you take a 2-year fix, 3-year fix, however fix you've taken. I'm giving this example, I'm saying we're only taking two years fix. So once the 2 year expires, what you do, you can go and remortgage the property, because by then the property price would have gone up. So we haven't gone with 7.5%, we haven't gone up, we haven't gone by 10%, we've gone up by only 5%. We're saying property price only went up by 5%, which is crazy, right? It normally goes up by 7.5% minimum. Okay, we're just estimating it to be 5%. So now, fast forward 2 years, that property now worth 176,400, as I've just said. So what you then do, you're going to approach another lender, another bank basically, and say, okay, now bank, I've got my property, I want to remortgage this property, and I believe this property has gone up by 5% each year. So what the bank does basically, will send someone, a valuation officer, to go and revalue the property to see whether the estimate that you've given them is correct. Obviously the bank is clever, they do that. Even if it was 7.5%, if you said was 5%, most banks would give you back that figure. Let's assume the bank went away and came back and said, actually, John, your property worth 176,400. So what the bank will do, they will lend you 75% of the new value, right? Which would be 132,300. So what we then do as investors, we're going to pay our existing loan, the 75% of the 160,000. Okay, which is 120,000. So what we do then, basically, we then put that £100,000 down here, £120,000. So we deduct it from our 132,300. So guess what? You would have made a capital appreciation of £12,300. This is just a benefit of owning a property in the UK. I'm not talking about rent you would have collected. I'm just talking about you owning a property. Just by owning a property prices goes up, you would have made £12,300 during these 2 years. During those 2 years also, you would have collected £4,080 a year. If you times that by 2, you would have made £8,160 in the 2 years. Add that up with your 12,300, that same property would have generated you £20,460 in the 2 years. Hello, that's a massive opportunity. That's a massive advantage, right? And you've got the property, and you still have the property, and you're still renting it. It's not been sold, so nobody has taken it away from you. A family member hasn't lived in the property. You've got that money, right? It's the benefit you get from investing in the UK. Well, you may be asking, oh, Rahim, I'm not buying the property because I want to rent it. I'm just buying it because I want to live in it. Basically, I just want to have a house in Nigeria. So when I return, I've got somewhere to stay. I hear you. I understand where you're coming from. But let's look at it in a different way. Okay, let's say if you're going to Nigeria now, you're only kind of staying for maybe a couple of weeks. Or let's say the longest you could stay, let's say 8 weeks, right? So if you invested £800,000 to buy a property, for you to only stay there for about 8 to 12 weeks, right? To me, it's not financially viable, right? You could actually, the money you made from your rental property in the UK, you can go and rent yourself an Airbnb, or you could actually rent a whole apartment whilst you're there, right? And then it's a better return on your investment. Obviously, if it's an Airbnb, it may look even better than the property you've built yourself, because maybe family members are in it, they literally ruin it for you. And in some occasions, I've got some of my investors, they said, Rahim, I've got a house in Nigeria. When I go on holiday, I don't even live in it. Because why? It's not nice anymore. They've not been looking after the properties. That's another way you need to think about it. So out of the £100,000, we've only spent £60,000, okay? Out of the £60,000, we would only spend about £45,000 because we were able to get back, we were able to get back £45,000 and we've only left in £15,000. So if you still had that £100,000, which we only reused £60,000 on, you've got another £40,000. So if you add £40,000 on top of the £45,000, you've got £85,000. Guess what? You can go and buy another property. Do exactly the same thing. You go and buy another property, you do exactly the same thing. So what happens then, basically, you'll be able to build your property portfolio here in the UK, right? With nice passive income coming through without being worried about the property being trashed, without being worried about family members invading your investment. It's here, it's secure, and obviously it is an amazing, and it is in a good condition, right? Let's look at it this way. If you're not returning back home permanently, right? You think about what you could do with that sort of money, right? If you could invest it here, right? It would be a better investment, okay? I'm not saying maybe you don't even have £100,000. Let's say you're building a house, it costs you about £50,000. You can still use that for £50,000. You can use the same formula in order to be able to make that investment a sound investment, right? And if you're not going back home, right, I would strongly advise you to invest here, especially if you're married, you've got children here, and you are settled here permanently. You don't see yourself living in Nigeria or Sierra Leone, Liberia, the Gambia, or Ivory Coast, Senegal permanently, because your family is here. Wherever you are, it's your home. So I would advise you to kind of invest here, right now, with whatever you have right now. Secure your investment, protect your investment, and then if you ever want to go back home, right, guess what? You've got a property portfolio, right? So you've got two options, right? Suppose you were able to use this formula. You're able to say, let's say you had about, maybe worst case scenario, let's say you had 5 properties, okay? And those 5 properties, if you ever want to go back home, you could sell one of those properties and you can go and build yourself a nice, amazing house. Because you know why? Because you decided to move back home permanently. So you're going back to live in the property. You're going back to settle in Nigeria, right? You're not going to visit. Okay? So what you then do, basically, you can sell one of those houses and then obviously build your own house back home, right? Even better, you don't even have to sell those houses, by the way. So what you could do, you could actually remortgage the properties, all 5 of the properties. Imagine each one of those properties, maybe it's been 5-10 years. Each of those properties may have accumulated a capital appreciation of minimum of £20,000, right? Let's say in the next 5 years. So 2020, that's £100,000, okay? You can use that £100,000, you can go and buy yourself a house in Nigeria, because now you're ready to settle in Nigeria. You're ready to live in Nigeria, and you're ready to live a comfortable life. And guess what? If you've got all those properties here in the UK, you'll be able to buy you'll be able to build a house maybe that worth maybe £200,000 in Nigeria, because you've got investment here. And the other benefit you get, if you decide to move back home, you've got 5 investment property that will become your pension. They become your pension, and you don't have to worry about working when you go back home. You don't have to worry about maybe going into businesses. You can just use that as your pension, right? If each property is generating you £340 profit every single month, and you've got 5 of those, right? You're talking over £1,500 a month, and that is a lot of money back home. Okay, you can literally live a luxury life with that amount of money. Plus, you still got the houses. Plus, you haven't lost the houses, right? You've only remortgaged them, pull that money out, and you've gone and build yourself a nice, amazing villa back in Nigeria. So that's a massive benefit. It's a massive, massive, massive benefit. Suppose that you really want to have a house in Nigeria for your ego. You just want to be someone who's got a house in Nigeria, right? So what you could do basically, do this step first. Once you've held these properties for 5 years, you can remortgage those properties and go and build yourself a house, right? You can build yourself a house if you only live in it or you don't, but at least you've got a safe and secure investment. Here in the UK, that would help you take your financial situation to the next level, which would help you kind of prepare yourself for when you're about to retire. Okay? So I've seen so many people get burnt by building houses back home. They struggle financially here. They struggle morally. Some of them are even living in shared houses. Some of them are living in a 2-bedroom house, crampy house with all their kids, only for them to build a house in Nigeria that they're not even intending to go back to, right? Why do you want to suffer yourself? Why do you want to go through that pain, right? To me personally, it's not a sound investment, right? If you want to invest, if you want a house, right? If you want to live a comfortable life, maybe buy the house here in the UK because it's a better investment. Right? Even if you want to build a house to kind of live in, right? You can actually buy a house for yourself here in the UK, live in it, right? When you're about to go back home, you can sell the house or you can remortgage. You can go and build yourself a house. Okay? Instead of using all that money that you're making right now to build a house in Nigeria where you're not even ready to go to, right? So my conclusion on this basically is, think smart, think wisely. Do not build a house in Nigeria because of ego. Do not build a house in Nigeria because family members are asking you to build a house. Do not build a house if you're not ready to settle back home, right? So if you're not ready to go there, do not build it, right? Get your property investment journey here, start investing here, start building your property portfolio here, and then whenever you're ready to go back home, whenever you're ready to settle back home, you can then remortgage your properties here and use that money to build yourself an amazing villa in Nigeria. I really hope I haven't offended anybody through this video. I'm just literally sharing my experience and the pain some of my investors are facing as a result of investing back home. I'm not just talking about Nigeria here. I'm talking about Sierra Leone, Guinea, Liberia, Senegal, Ghana, Pakistan, Jamaica, and the countries like that. Some of my investors are from these countries, and they've been actually sharing their pain and that sort of journey that they've gone through, and they've only realized that it wasn't worth investment. So I'm really hoping that this have literally brought a shining beaming light into your mind, and you start thinking about investing where you are instead of investing in a place that you're not ready to go back and settle in. I really hope this video has been helpful. If this video has been helpful, don't forget to hit the like button below. Subscribe to my channel for more amazing tutorials.